Hello and welcome everyone to the Week Ahead Commodity Report, where we of course will be reviewing the markets for the week ahead. Now March is certainly shaping up to be an incredibly lucrative month for traders, with China's comeback, the re-accelerating inflation, the energy transition, global food crisis now emerging as four of the biggest and most explosive macro themes driving the commodity markets right now. All of these major market moving themes combined, they are presenting savvy traders with an exciting and endless flow of back-to-back profitable opportunities to generate huge profits fast. You can't talk about commodities without mentioning China, and that's because China's great reopening, that's one of the hottest and most pivotal macro trading opportunities of the year, if not the decade. The most eagerly anticipated data released this month, that reveals China's manufacturing activity. It expanded at the fastest pace in more than a decade in February, and China's manufacturing PMI, that smashed record, surging to 52.6 from 50.1 in January. That's the highest reading since April of 2012. Meanwhile, the official National Bureau of Statistics non-manufacturing PMI, a measure of economic activity in the service sector, that soared to 56.3 in February from 54.4 a month earlier. That's the second consecutive monthly increase since China reopened its economy and the highest reading in 2 years. And the data, it doesn't stop there. Similar bullish trend is also being reported in consumer spending activity. China's a country of 1.4 billion people who stashed away 2.6 trillion US dollars during their 3 years of lockdown. And now China appeared to be enjoying their newfound freedoms again by embarking on a massive revenge spending spree. According to data, Chinese household consumption that surged in January through to February, with revenge spending on real estate, travel, hotels, dining, entertainment, as well as retail spending on luxury goods, cars and electronics. The markets immediately reacted to the data with a long list of commodities from aluminium to copper to palladium to platinum to gold to silver to zinc to crude oil to natural gas skyrocketing to multi-month highs, with many notching up spectacular double-digit gains. And this is just the beginning. Then there's China's $1 trillion US infrastructure investment plan, which will begin rolling out this year. The infrastructure plan that involves pumping hundreds of billions of dollars into mega projects to boost the economy, from new roads to bridges to water tunnels to high-speed railways, renewable energy and power network to newer greener megacities and parks. Interestingly, we've seen this exact government policy move before, with President Joe Biden's ambitious Build Back Better plan almost 2 years ago, which played a monumental role in kickstarting the current commodity supercycle. Ultimately, China's mega infrastructure and green energy push means one thing: China is going to need more commodities and lots of them. But as you know, the world is running out of commodities at a record pace and facing a historic shortage off the back of a triple deficit, low inventories, low spare capacity and low investment. As savvy traders know, the comeback of China's economy and 1.4 billion Chinese consumers, that's a very exciting story and a massive game changer for commodity markets in 2023. China is the world's second largest economy and the biggest consumer of every possible commodity imaginable, from the metals to the energies to agriculture, and their appetite for commodities is about to boom. Rapidly rising commodity demand from China could inevitably send the world economy into another supply side shock and undermine the efforts of the world central banks to rein in inflation. When inflation accelerates at a red hot pace, so do the price of commodities. That's why it's no surprise that a growing chorus of leading Wall Street banks, from Goldman Sachs to JP Morgan to Bank of America, they have repeatedly beat the drum that higher prices they're coming, predicting commodities will be the best performing asset class of 2023, outperforming every other asset class out there for a third consecutive year running. It is often said that history doesn't repeat, but it rhymes. So if you've been kicking yourself for missing out on some of the biggest trading opportunities in 2021 and 2022, then you've been gifted a second chance. 2023 is going to be a record-shattering year for commodities, and China's comeback and re-accelerating inflation, that will be two of the biggest macro themes driving the markets this year. If you want to take advantage of these extraordinary markets and huge money-making potential on offer, then there's no better time than now. Banks, hedge funds, they're making multi-billions capitalizing on the huge macro-driven trading opportunities right now, and it's not so different for the retail market. The majority of our clients at the Gold and Silver Club are utilizing our proprietary research-driven trading approach. They've already made in excess of 6 and 7 figures, and we're only in March. If you want to supercharge your trading results and make 2023 your best year yet, then just go to www.jointhegoldandsilverclub.com now to learn how our mentorship program can take your trading to the next level. Now, looking ahead, It's another big week for the markets with Fed Chair Jerome Powell's two-day semi-annual testimonial before the Senate Banking Committee on Tuesday, followed by his testimonial on monetary policy to the House Financial Services Committee on Wednesday. Also on the radar will be the closely watched US jobs report for February, which always has the potential to move the market significantly. So with that, we'll move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. So first of all, we have to look at natural gas here, given that this was such a clearly telegraphed trade opportunity to you. In the last week, we've broken out 15% over the month. Natural gas prices, they're over 20% now. And of course, on Friday, we broke out 9% to the upside, breaking back above the 3 handle. So again, this was a very straightforward opportunity to take advantage of. We had absolute extreme fear in the market the previous week as we broke back down towards 20-month lows. As you know, when many traders are terrified to get into a particular market, when you have such extreme negative sentiment, these are often some of the best times to be snipering in, building out a trade. We've got multiple positions built into natural gas. We started scaling out of more profit there on Friday. And in fact, we booked 700 points on one of our positions just into the close on Friday. And we're looking to do more of the same as we go into next week, as it's been such an explosive run to the upside. So I do congratulate everybody who was also able to capitalize on this very clear trade opportunity that we identified with you in the last week here on natural gas. Tremendous breakout to the upside, 15% last week and over 20% so far this month. Now, platinum was also the star here. So last week, platinum prices, they broke 8% to the upside. Again, we talked you through this last week. Our preference was platinum versus gold. The platinum to gold ratio, that had broken all the way down to 0.5, which essentially meant the platinum prices, they were half the price of gold. Historically, every time we've seen platinum prices get to half the price of gold, platinum will outperform gold. We've definitely seen that in the last week. Platinum prices up 8%, whereas gold, we've only seen a 2.4% gain to the upside. Still a decent move into Friday's close, but nothing like the magnitude that we've seen on platinum prices, which essentially they broke out over 830 points to the upside last week. And in fact, right off the open on Monday, we started to pump higher on commodities, on platinum prices in particular, again, over an 830 point move in the last week. So I hope that many of you also capitalized on that move. Now, crude oil also been fantastic. We closed limit up on Friday, 4% gain last week, 2.5% gain just on Friday. And you can see here where we took the opportunity as well to scale out of more profit on this market. In fact, we booked another 500 points here on Friday on one of the positions that we just entered the previous week here, sub $74 per barrel. So you can see a lovely breakout to the upside here. In fact, we took the opportunity on Friday to bank another 650 points profit on crude oil from a position that we just entered the previous week underneath $74 per barrel. So you can see each time we're coming back down towards the lower end of the channel. Very simply, we're treating this as a range-bound market. There's been so many opportunities now to keep coming into this market and just trading the ranges all the way back to December here. You've had a multitude of opportunities. Again, it's not been buy and hold. Every time we're coming back down towards 73, 74 US dollars per barrel, you're seeing multiple opportunities to keep coming in, reloading, and then yet again, bank at the swing highs here and just rinse and repeat. We've seen that multiple times now on oil, and very simply, it's been the same playbook yet again in the last week here to bank a nice windfall amount of profit into the close there, as oil has had a lovely pump on Friday. Again, a 4% gain to the upside. Again, all of these trade opportunities we've been telegraphing to you, everything from natural gas to crude oil to platinum. Then moving over again to the metals here. So the breakout that we've seen so far on gold now puts us back above 1,850 US dollars per ounce. We're also seeing a breakout on silver into Friday's close, back above $21.23 per ounce. Now, my expectation as we go into next week is that we could see a bit more of a run to the upside, particularly on gold and silver and platinum, on palladium going into the early part of next week. But I am mindful, once we start to get towards the end of next week into non-farm payroll, and then the following week where we have quad witching, I'm expecting another rotation back down towards the swing lows again. So we may well get another short-term pump to the upside, but then a rotation all the way back down, retesting the swing lows. And at that point is where I'm looking to sniper in and build out further positions here on many of the metals. Of course, at the moment, we're capitalizing on these breakouts that we're seeing on commodities, from natural gas to platinum to crude oil. And what I'm looking at going into next week, again, is looking to take more profit off the table, off those commodities. And then as we start to see potentially more pressure to the downside, once we move into quad witching, which will be approximately Friday the 17th of March. That's where I'm looking to reload again and rinse and repeat the whole cycle again, getting back in at lower prices and then looking to capitalize on the capital inflows that you often see once you start moving into the month of April. And whatever long-term goal you're looking to achieve through trading, whether that's to create a full-time income or a second or replacement income, or just to earn a better return on your savings, then now is the time to take action to really give yourself the gift of a better 2023. If you want to maximize your money-making potential and thrive, not just survive in these fast-moving markets, then you need to adapt your strategy to the current market conditions and, most importantly, utilize a professional, research-driven approach. One of the biggest obstacles that holds back 99% of retail traders from achieving their desired success is not having access to the correct professional strategies, institutional level data, and market intelligence to make confident decisions with accuracy and certainty. There's a huge gap between the top 1% of professional traders and the bottom 99% of misguided retail traders who simply rely on outdated technical analysis or gimmicky technical indicators that don't work in these markets. If you want to get yourself out of the bottom 99% and into the top 1% who are actually crushing it and making 6, 7, and 8-figure returns in these markets right now, then you need to utilize a professional, research-driven approach, or you'll just end up wasting lots of time, money, and effort, and you'll have no results to show for all of your hard work. In these rapidly changing markets, you need to be constantly innovating and evolving, and technical analysis and outdated technical indicators, they won't work. Those days, they're long gone. If that's all you're relying on, the odds are already massively stacked up against you, and if you want to change your results, then you have to change your thinking. If you want to learn our exclusive research-driven trading approach that is never taught to retail traders and only reserved for professional traders in banks, hedge funds with access to powerful game-changing insights, including where the banks and hedge funds are buying and selling in real time, the key liquidity zones, so you can enter and exit the markets with pinpoint accuracy, alongside the fundamentals, the macroeconomics, the capital flows, and the daily, weekly, monthly, and quarterly real-time data-driven cycles and intermarket correlations, then you need to join our mentorship program. As we head into the new year, we are in one of the greatest eras of wealth creation the world has seen, and if you want to successfully capitalize on the huge money-making opportunities ahead and build significant life-changing wealth, then there's no better time than now. If you want to upgrade your income, then you have to upgrade your skills. Never underestimate what you can achieve in the next few months from now with the right guidance and mentorship. Time is the most valuable commodity that we have. Make sure that you don't waste it. If you want to join our community of successful traders and take your trading to the next level, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, access to institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP.